In this video, I am going to be revealing a 5-step price action trading strategy that I have used to profit from the last 2 years. Make sure you hit that like button and subscribe to my channel so that you don't miss on any of our new videos. With that being said, let's get into today's video. The major difference between professional traders and novice traders is that the professional traders use a very rules and steps-based approach towards trading, while the novice traders trade based on their gut feelings. Professional traders will try their best to formulate a systematic trading strategy that completely eliminates emotions from trading. Today, we will look at such a strategy. With this strategy, my goal is to give you a systematic approach towards price action trading. Now, price action trading is very subjective in nature. This means that if you show the same price chart to two different individuals, both of them may differ in their analysis. One might predict that the price will go up, while the other might feel that the price will go down. With this strategy, I want to show you how you can create a rule-based system around a subjective matter like price action. So without any further ado, let's get into the strategy. The strategy is a simple trendline breakout strategy with added rules and steps, so that you can avoid false breakouts that commonly occur while trading. Trend lines are nothing but simple lines that are created by connecting the highs and the lows of the price. In an uptrend, we will create a trend line by connecting the lows of the market. When the price breaks below this trend line, we can say that the price has started a downtrend. Similarly, in a downtrend, we will create a trend line by connecting the highs of the market. When the price breaks above this trend line, we can say that the price has started an uptrend. So let's now look at the steps for buying. The first step in this strategy is to identify an existing downtrend. Then we will create a trend line by connecting the swing highs of the downtrend. The second step is to wait for the price to break out of the trend line. In this case, we want the price to break above the trend line. Here we see that the price broke above the trend line on this candle. Now, a lot of novice traders will enter on this candle. In hindsight, we can say that buying at this breakout was a good decision. But this could have been a false breakout. The price will sometimes immediately reverse to close below the trend line again. So the breakout traders that entered here get trapped into a losing trade. But we are not like these novice traders. So we will not enter a long trade at this breakout. We want a confirmation that the breakout is real. So we wait. The third step is to mark the immediate resistance level. After the breakout, we will mark a horizontal line at the nearest resistance level. To identify the most recent resistance level, here is a trick. Whenever we spot a breakout, we will look at the trend line. The price touched the trend line at these points. We will identify the last point that touched the trend line before the breakout. We will mark that high as the resistance level. Now, the fourth step is to wait for the price to break the resistance level. After the break above the trend line, we want the price to break above the resistance level as well. When the price breaks above the resistance level, this will confirm that the price has successfully broken out of the trend line. The fifth and final step is our entry. After the break of the resistance level, we want the price to pull back to the resistance level, and we will enter when the price retests the resistance level. We will enter on the first green candle that appears after the retest of the support level. Now, let's combine these rules and look at a buy trade. Here on this chart we can see that the price was in a downtrend. So we will connect the swing highs of the downtrend and create a trend line. Then we wait for the price to break above the trend line. On this candle, the price breaks above the trend line. Now, aggressive and novice traders would enter a long trade on this candle. But we are not novice. We will plot the nearest resistance level and wait for its break. Now, to plot the nearest resistance level, we will look at the trend line. We identify the last touch of the trend line before the breakout. We identify this as the last touch, and we will mark this level as our point of resistance. We wait for the price to break above the resistance level. On this candle, we see that the price breaks above the resistance level. So now, this resistance level has become a level of support. So now, we wait for the price to pull back at this support level. After the pullback, we will enter a buy trade when the price makes a green candle. So, we enter on this candle. We can keep our stop loss below the support level, and we can place our targets at 1:1.5 risk-reward ratio. And as you can see, we made profits on this trade. Now, let's look at the rules for selling. So for selling, the first step is to identify an uptrend. An uptrend is identified when the price makes higher highs and higher lows. We will create a trend line on the uptrend by connecting the swing lows. The second step is to wait for a trend line breakout. In this case, we want the price to break below the trend. When the price breaks below the trend line, it signals that the price may start a downtrend. But we will not enter a sell trade just yet. The third step is to mark a support level. We will look at the trend line and find the last touch that occurred before the breakout of the trend line. We will extend a line at this point and mark that as a support level. Now the fourth step is to wait for the support level to break. When the price breaks below the support level, we can confirm that the price has found momentum in the downtrend and we can expect a big move on the downside. The fifth and the last step is to enter on the retest. After the breakout, we wait for the price to retest the support level. When the price retests the level, we expect the price to face resistance at this level. So, when the price retests this level, we will enter on the first red candle that appears. Now let's look at a sell example to understand the strategy. So here, we can clearly see that the price was in a strong uptrend. We see that the price was making higher highs and higher lows. So we create a trend line on the uptrend by connecting the swing lows. Then we wait for the price to break the trend line. The price breaks the trend line on this candle. This breakout indicates that the price may make a downwards move. But we are not too sure about that. So we wait. We now create a support level. We do so by extending a line from the last touch on the trend line before the breakout. Now we want the price to break below this support level. The price breaks the support level on this candle. The final step in the process is to enter at a retest of the support level. When the price tests the support level from below, we will enter at the first red candle. So we enter here and we can keep our stop loss above the support level. We can place our targets at 1:1.5 risk-reward ratio. As you can see, we made profits on this trade. That brings us to the end of this video. If you liked this video, then be sure to subscribe to our channel so that you don't miss on any of our new videos. See you soon. Goodbye.